Salam sejahtera and a warm welcome to all the startups that are in the call today. It is my absolute pleasure to be part of FWD's deep dive in Islamic Fintech. My name is Ramli and I act as one of MDEC's guardian for Malaysia's Islamic digital economy. So the outline of our presentation will touch on a little bit of what I do in MDEC, and then we'll go into some of the headline news, buzzwords that's currently happening within the Malaysian landscape. So you have a feel in terms of the products and solutions that you may want to also embark on. And the final section will be on that deep dive on Islamic fintech structures that are already currently being commercialized, and how agnostic players can also look to embrace some of these ethical solutions. Let me just share my screen now. Can everybody see my screen?
Yep.
Let me launch this. Okay. So welcome to Malaysia's Islamic digital economy. So first off, and I think this is a really pertinent question that must be asked upfront in terms of what's in it for you to be part of the Islamic digital economy community, which is propagated within not only in MDEC, but SC by regulators because of our global positioning for Islamic finance. So on that note, if you were to read the latest Global Islamic Economy Report by DINA Standards, we are ranked #1 for 8 consecutive years. If you were to pick up any Islamic finance report, we are also ranked #1 for the last 2 decades. So because of this thriving ecosystem, there is a lot of concerted efforts and collaborations, not just with public agencies like MDEC, but also with SC and regulators to ensure we continue to be at the forefront. And through these initiatives, we now want to connect the dots to the digital economy. And Alhamdulillah, end of last year, based on DINA Standards Global Islamic Fintech Report, we are ranked #1. So the basis of us being ranked #1 is the number of Islamic digital, Islamic fintech companies that are within our ecosystem. But as you know, with the speed of technology and solutions that are coming out globally, not just in Malaysia, you've got Indonesia, you've got GCC, which is also considered a hub for Islamic finance. There are always new players to come in. So in MDEC, which is one of my core KPI, is to ensure there is a sustainable supply of quality Islamic fintech companies that goes into the system so that we can groom to become global champions. Some of the initiatives that we have done to date so far, we've signed an MOU with Qatar Financial Center in January 2022. Alhamdulillah, we managed to funnel 10 Islamic digital economy companies across to their accelerator programs, and 2 have been successful. So one is called Global SciTech. They do behavior screening. The founder is Dr. Haniza. Through the success of her being the top 5 in the accelerator program, Qatar Development Bank invested in the company and helped to open doors to Qatari banks. So, and she managed to secure 2 proof of concepts. Another company is called Pewarisan, who is also one of FWD's Cohort recipient and winner. So Nizam, which is the founder, was successful in his application for the recent hackathon, and they're currently in the process of the discussions for some investment notes. So these are some of the things that we're doing, and we're hoping to open up more doors, opportunities, market access. And why is it so important? It's because Malaysia's population is only 30 million, but so how can we get to unicorn with 30 million? So you need market access for you to grow, right? And that is MDEC's core charter in terms of being able to connect the dots to other global communities. So under OIC, Organization of Islamic Cooperation countries, there are 57 countries. And we're in the process of seeing how we can work in terms of opening, in terms of providing platforms to showcase Malaysian startups in support of growing their businesses and also solutions and some of the problem statements that these communities are having. Okay. So as much as I mentioned earlier that, we're champion for Islamic finance. So but in reality, you can see here Islamic Fintech, this is 2021 numbers. It's just an island compared to the ocean of tech companies within the landscape. But if you look at, example, Microleap. Okay, so Microleap does both Islamic and also conventional, but they choose to profile themselves as an Islamic fintech player. Why? So part of today's session is to create that awareness in terms of why you would want to be part of this ecosystem. And it's all about this viability of ethical solution and expand organic growth because of the value proposition that it can bring. So to date, so this is a running number within my database, and we're collecting as many players as we move forward and progress in building a stable base of Islamic fintech companies. Because remember, my number one charter is to ensure that Malaysia remains to be number one. So I need to know who is out there in the market. So I put stars next to the tech companies that have done extremely well, and they are all startups, right? Some have gone quite big, like for example, Global Cytex, like I mentioned earlier. She is in 3 countries, so she operates in 3 countries across 30 companies. So with the addition of Qatar, now she's operating into 4 countries. So you've got Kapitani, Pewarisan. So this list goes on, and I hope to embrace the founders today, also in support of you exploring opportunities for the Islamic digital economy. So going back to the value proposition in terms of what's in it for you. So number one, you would be eligible for grants that's currently in the market. So right now, the biggest one so far is by this iConnect in Islamic finance. So iConnect is an initiative between 3 core stakeholders. And it's the very first that's ever been done in Malaysia so far. It's between the government, which is represented by MOSTI, Minister of Science Technology Malaysia, together with Academy Science Malaysia. So they are the ones that are putting money on the table, all right? Together with public agencies like myself, SC and Benegara, and we also have the private sectors to be part of this community of iConnect initiative. And it's all in support of disruption solutions for the digital world. So you've got 4 million, it's a 4 million matching grant. So far, there has been 2 successful candidates. Again, it's Global Cytex, so she's really been doing so well. And another one is a company called Skillic. So Skillic, the founder is Dr. Ahmad. He does robo-advisory. So we're in the process in support of meeting some of the conditions of the grant, which includes having to partner with local Islamic banks. So inshallah, there will be 2 Islamic banks that are keen to support this commercialization of his solutions, because to the Islamic banks, the capex is paid by the government through this to this matching grant, right? So for the Islamic, they don't have to put a single cent. So that is the commercial value which iConnect brings in support of growing and also expanding the products and solutions for Islamic fintech. Next, of course, you have Cap Bay. When I last spoke to the CEO, XX, he mentioned that there was close to about 700 million that was dispersed, and he's hoping to grow this further. And 10% of that is representation of the tech sector. You also have Global Partners, which is up to 1 million. The second point is the scale up. So remember, I mentioned earlier, our 30 million Malaysians are not going to get us to unicorn. So how can you have that access? So your 57 OIC countries are represented by these 2 billion Muslims. So if you can create that storyline from the get-go, you would have access. And naturally, having a solid value proposition for the communities within the Islamic digital economy helps. And it doesn't matter whether the founders are Muslims or non-Muslims, okay, because you offer a solution, right? So something that I'd also like to raise today is that I'm not saying that Islamic fintech is better or Islamic finance is better than conventional, or conventional is better than Islamic finance. No, it's all about creating that awareness in terms of alternative solution. So if you do not wish to expose yourself to compounding of interest, which is what conventional banking is, then you have an alternative. So similarly for Islamic fintech is the same, is to offer the ethical solutions to the general public in support of us growing this landscape and also Malaysia's value proposition to the global world, because we are already number 1 for Islamic finance. Okay, 3 is this market leader. So remember the little island that I highlighted earlier. So because it's such a small pool, any movement you make creates a bigger ripple. And I've got one company that is about to launch, Do It. It's a buy now, pay later B2B platform. They have yet to launch, but when they launch, hopefully within July, if not if August, they will be the world's first buy now, pay later Sharia platform. And if you are a startup, who doesn't want to be number one, right? Because your storytelling to investors would be phenomenal. So these are some of the things that which I feel within MDEC, could help curate in terms of their storytelling in support of your life cycle as a startup. And finally, of course, is the leveraging on the strong support. So I mentioned iConnect is just one initiative. We have so many discussions that we're currently ongoing. Another thing which I like to highlight is you may have picked up within my LinkedIn. We did an industry dialogue together with Topa. And he is all for pushing Malaysia for our Islamic digital economy. There's been a lot of support for Islamic finance. So now the focus by the government is in Islamic Fintech because of our role in terms of us pushing through digital solutions and making the nation being more receptive to the world in terms of how we want to create global players. All right, so the second bit will be on the current trends. So under MDEC, we do a lot of top-down in terms of our initiatives and guidelines that we fulfill within the respective KPIs. So apart from the My Digital Blueprint, naturally, Islamic finance has a strong role within the Islamic digital economy, and the Bank Negara's Financial Sector Blueprint, which was launched in February last year, holds a lot of goodies. So for the agnostic players as well, I've also included, some of the digital first solutions which you may want to also look at, which is, example here in terms of building resilience for financial literacy. Shaping a financial system that is more equitable solution. So if your products and services can fulfill some of the first 2 roles, that will then be extremely key in you profiling yourselves to the current market stakeholders. And of course, for me personally, will be the last role, which is to ensure Malaysia's global positioning. So not only are we connecting the dots in terms of our global leadership for Islamic finance, but also for Islamic fintech as well. Okay, so I mentioned earlier in terms of your stakeholders profiling, right? So this is all with regards to the Malaysia's digital banking license, and as you know, for me personally, the winners of the banking license will revolutionize Malaysia's financial landscape. So from the regulatory framework that was issued, fast forward today, Bank Negara announced 29 contenders, and there are 5 licenses up for grab in both Islamic and conventional. But if you were to read that framework, it's very agnostic. So the digital banks offer meaningful access to responsible usage of suitable financial solutions for underserved and unserved market segments. So it's pretty generic, right? Whether it's conventional or Islamic banks. So how can Islamic banks, the digital bank, create that value? How can they be different? And that is through zakat and wakaf. So currently we are in discussions with some of the zakat institutions in support of how we can mobilize zakat monies. As you know, Muslims, is compulsory for us to pay this, and there is quite a lot of the liquidity that's coming in from the zakat and the wakaf can be quite substantial. Historically, we have always tried to see how we can connect the dots, but it's been very, very challenging because of the framework and legality that is attached to it. But now with the digital age, it's also possible, and we're currently exploring with one of the biggest zakat institutions in support of how we can mobilize some of those funds to create economic revival in support of, creation of asnafpreneurs. Asnaf means people who are in need. So how can we convert those who receive to become givers of zakat? All right, so these are the 29 contenders. So your guess is as good as mine in terms of who will actually be the winners. But I would like to highlight that in support of you exploring, looking at the product solutions that you have, do cross back with the Banegara financial sector blueprint, because these are the players who will be keen to embark or onboard some of your solutions. So if you can hit some of those key thresholds that are mentioned, for example, financial inclusions, you're looking at, increasing insurance and takaful coverage, how can you do that seamlessly? Packaging some of your financings together with maybe complementary takaful and also insurance coverage, that will be key to the potential players who will become the winners of the digital banking license. So I've put a star at some of the boxes here. So this is all based on the Vulcan Post, who they think could potentially be that 5 winners. So do click on this link and explore and see how you could make a difference in terms of your value proposition in support of these players when they embark on this journey. And I mentioned, I cannot emphasize how important it is to know who the players are, because these players will be the future to our landscape. Okay, and then in support of the digital first solutions, I like to make a comparison, because sometimes, when people talk to me, they confuse between, social finance and also financial inclusion. So allow me to just re-highlight again, the key differences. So social finance is all about, investment approach for social and environment challenges while generating financial returns. Financial inclusion is serving the financial needs of the underserved at affordable costs. And let me just quickly give you an example. So under financial inclusion, you have one of the top players or one of the leaders, market leaders. You may have already heard Hello Gold. So Hello Gold is the world's first Sharia digital platform that allows you to buy, invest, sell, and also redeem physical gold on the platform as little as RM1, right? So that is, to me, financial inclusion. On top of them being so affordable, their platform also does dollar averaging costs. So if you're familiar, so when I first started doing my own investments and also, building my own retirement fund, naturally you will want to have this dollar averaging mechanism. So dollar averaging means you need to invest on a monthly basis, in the hopes that when you buy, for example, say unit trust, right? In the hopes that when you buy that unit trust, it is cheaper, or if not, at the cost or price that was less than what you bought last year, but it has to be on a frequent basis. So what Hello Gold does is on a daily basis, so assuming you've set aside RM500 into the platform under the Smart Saver option, the platform intuitively uses blockchain and AI to pick up gold at the lowest price on a daily basis. So instead of you having to monitor the platform, they allow technology to do it for you. And I think it's so amazing. So I've used it, and I'm encouraging my family and friends to also invest in Hello Gold. So that's an example of financial inclusion. Okay, social finance is something that you can. So for example, if Hello Gold, for every single financing that you invest into Hello Gold, you get a takaful or insurance coverage. That in itself is social finance, because you're having social impact to every single money that you put in. So some example. Okay. So the key thrust that we're currently doing under MDEC in support of both this key charter is one, mainstreaming social finance. And, we are nurturing or, talking. So today's session is all about, in support of our startups, exploring the benefits and also considering the alternatives for you to embark on product solutions in support of these 2 key trusts that is mentioned under Banegara. So it's all about mainstreaming the social finance. 2, strengthening the financial safety nets. Based on Banegara's report, it mentions that the penetration rate is 4.8% to 5%. That's just so low. So how can we increase this? So example that I mentioned earlier under Hello Gold. So every single investment you get a free takaful coverage, and that would help to improve the baseline from what it is today. And then thirdly, so instead of inventing the wheel, there are already existing structures that is in support of both these core pillars. So how can we leverage on this and make it better for everyone? some of the reasons, so, people always talk about, why are we going into this so much? So, and I mentioned earlier, is because of the mobilization of liquidity, right? So this is taken in 2019 based on this report. The amount of monies that are collected in 2019 within the respective states, of course, Kuala Lumpur and Selangor has the highest, because a lot of the Islamic banks and Sharia compliant corporates that are listed under Bursa Stock Exchange are within these two states. When we spoke to Lembaga Zakat Selangor, I think maybe about a month ago, so they mentioned that from 510, the collection has now gone up to 900 million. So if some of that monies can be funneled to my Islamic digital economy, how amazing is that, right? In support of financial, social finance, and also financial inclusion. So these are some of the discussions that we're currently undergoing together with AMDAC, and some of the collaborations that we are embarking on in support of making a statement on how Malaysia can be at the forefront to revolutionize the zakat and also the wakaf landscape. Do we have any questions so far? Is everybody good?
All good so far.
Sorry?
All good so far. No questions.
Okay, thank you so much. All right. So this is the session that we're going to go into the deep dive now. You probably have, I understand from Safa and also Wayan that you've watched my deep dive, part 1. So this is deep dive part 2. I will do a little bit of recap, but I don't want to go into it so much because I want to concentrate more on the existing structures that are already commercialized, which I did not touch under part 1. So a quick recap to the flow that I spoke of under part 1 is SALE. So these 4 core letters represents the core in terms of the contract that are approved by Bangara and also SC in support of completing the Sharia governance in terms of the products and solutions that are already commercialized within Malaysia. So let's just go through it one by one. Do not be concerned with the Arabic meaning. Again, I mentioned it again. It is purely a translation of the Arabic words to mean the same thing under English. All right. So under the first row, you have sale base. So sale base is murabaha. Murabaha means sale and purchase agreement, sale of a product with a markup. And I've got a specific structure which I'll go into later. Under agency, it's about the appointment of the platform acting as an agent on behalf of the investors. So for example, it's a ECF or P2P, you've got more than one investors, correct? So typically the platform would then appoint itself as an agent to act on behalf of the pool of investors within that platform to enter into a specific, I'll jump down to the equity, whether it's musharaka, mudaraba, or even to look at other potential hybrid structures, all right? And then the third one is lease. Lease is ijara. And a lot of our car financing are done based on this structure. On top of these 4 contracts that I mentioned, another 2 more, which is typically used within the Islamic Fintech community, is endowment, which is the wakaf. And I touched on a little bit in terms of the potential use of it, all right, and how we want to mobilize some of those funds. And then, of course, Kad Hasan, which is interest-free financing. Okay, so this is the first structure for a peer-to-peer platform, all right? Oops, sorry. So just bear with me while I go through this one by one. So you have the business owners. So say, for example, it is a company who wants to expand and buy machinery, all right, in support of their future growth. So you've got the business owners, going to the P2P platform, and the P2P platform is then backed by specific digital technology, whether it's blockchain, machine learning, artificial intelligence, or it could just be a cloud-based. So it really depends on that P2P platform. And there is this issuer agreement so the business owners then becomes the issuer of these notes. Okay. So based on the platform's intuitive credit screening, they will then process this application to see whether you are eligible to apply or not under the platform. So once the platform has successfully approved this particular applicant, they then becomes agent on behalf of the business owners. In this case, I would now call them issuer. All right, on this leg. So once they become successful, they are then deemed as issuer. Okay, so if you were to go to any app, you know, whether it's funding societies or you go to you go to your say MicroLeap example, right? So in each of this platform, you can pick and choose who you want to invest in, correct? So depending on who you want, so the platform then invite investors to fund the issuer's notes issue. So I mentioned earlier, the example is they want to buy machinery for business expansion, all right? So the investor then subscribe to an investor agreement, and the platform then appoints themselves as the investment wakil. So remember I said wakil just now, the wakala agreement purely means they act on behalf of themselves, wakil as agent, on behalf of this pool of investors, because the investors could run in 30, 50 people, correct? So having one stop center as a wakil helps in support of this Sharia completion for the financing to be dispersed to the successful applicant. So right now, as you can see from these two legs, right, the platform acts or they wear two hats. They are an agent to the applicant, and they are also a wakil to the issuer. Okay, so for the commodity murabaha leg, because remember under murabaha, you must have an asset for you to buy and sell to create that indebtedness, that you will have to pay back over time, right? Which is the financing amount, right? So they then use the bursa suq asila to buy commodities, and this is Sharia compliant. So who has the money? So the money is coming from the investors, right? So the investors then inform the platform, okay, please buy this commodity on my behalf. So the platform on behalf of the investors purchase the commodities on spot basis. So assuming if the issuer requires say 5,000 ringgit to buy that machinery, right? And the amount that is purchased from the commodities bursa suq asila is equivalent to 5,000 ringgit. So in this leg, right, who owns the commodity is a question that I like to ask you, because it's very important in terms of ownership of the assets to make it Sharia compliant. Anybody want to give it a shot? In this leg 5 and 6, who owns the commodity? Mazri, you want to give it a shot?
Number 5, I guess. The
Who
platform.
owns it? Who owns the
owns
commodity?
Is the group of people that part of the wakala?
Yeah, so your investors, right?
Yeah, the investors.
Yeah, so in this leg, because remember here, platform on behalf of investors. So the investors own this commodity.
Yeah.
Okay, because as a investment wakil, right? So they're acting on behalf of the investors to buy. So under leg 5 and 6, the commodity is owned by the investor. Okay, what happens next? So the platform, again, acting on behalf of the investor, sells the commodity to the issuer. Okay. And then the issuer, to reflect their obligation to pay back, is through this notes issuance. That I promise, thank you for this commodity, and I promise to pay you back, say 6 months or 1 year, depending on how long the tenure of financing that you have chosen. Okay. So who now owns the commodity? Would someone else like to try? William, since he spoke to me. Who now owns the commodity? Remember here, this day, the platform sells the commodity to the issuer. So who owns the commodity now?
The issuer?
Correct. So the business owners now own the commodity, but does he have the money?
No.
Not yet.
5,000 ringgit? No, right? So what does he do? He
borrow.
sells the commodity to broker B and receives cash. So this is the commodity murabaha structure. And where is the creation of debt? Under leg 7. That I promise to pay you back over 6 months or 1 year. And the sale price, which is 5,000 ringgit plus say 10%, right? Being the profit payments, is your sale price. And it's so important in terms of Sharia governance that this sequential approach from ownership of the asset from the investor and transfer of the asset to the business owners is in sequence to create that debt. Otherwise, it will be null and void. So whenever you hire advisory, not only will they confirm that this structure is Sharia compliant, on a yearly basis, they may want to do due diligence or audit that your back end office, because this is a perpetual thing that, so many people will come to this platform to raise financing, right? So they want to make sure that at any point in time, if they were to do an audit of your tracking of your processes, it is based on this sequence. And if you can notice here, I put broker 1 and broker 2. It must be 2 different parties. And Bursa Sila is an international platform that is used globally, not just by Malaysian companies, but also global companies worldwide. They actually run algorithms. They actually run statistics to prove to anyone at point in time that broker 1 and broker 2 are different people. It must be of different people. Okay.
One question.
Sure.
So in Malaysia, so this is governed by Bank Negara.
So Bursa Sila falls under its Securities Commission, equities. So Bank Negara governs Islamic banks and takaful. Securities Commission governs Islamic capital market, which includes our debt market, bonds and sukuk, equities, asset management, and our fintech, which is peer-to-peer and also ECF.
All right, got it.
Yeah, so they are the governing regulator for the Bursa Sila. Does anybody want to ask any questions with it? Is this very clear? I may ask questions toward the end,
Roslina, this is Lisa here. Can you hear me?
Yes. Hi, Lisa.
Hi, I'm from IntelliWare Solutions. Most of the time, my team members are participating. Today, I'm very happy that I joined your session. Truthfully, we have actually proposed a complete solution using blockchain for this purpose, commodity murabaha.
Oh, fantastic.
Yeah, it's completed. And it was actually, we did in ASDA a different cohort, not this particular program. But in this particular program, we proposed Wakaf Go. However, our discussion has went through a slightly higher level with HSBC Amanah. But the second discussion we had together with Raja Amir and the team was that we were addressing the exact issue that you were telling us. That is, in order for us to really address whether or not is Sharia compliant is really on the sequencing. Or else it's going to be now. And the thing is that I do not know the second session we were brought to. They want us to resolve the issue or mitigate the issue at the DD&Co level, as in like the other side of this domain. So for us, being only a software developer house, it's not easy for us to knock those doors. So if you can comment on this.
So who's helping you for the Sharia structure? Which Sharia advisory are you working with?
Mashrif Advisory.
Mashrif? Oh, okay. Yeah. Because if they were to, Bursa Sila has been around since I think 2010, if I'm not mistaken. So they've been around a very long time. This leg of buy and sell, it happens within 2-3 minutes because it's all digital already. The minute you click buy, automatically it's already in sequence. So it's just an open API that you do together with Bursa Sila and then sync it together with your processes.
Agree. That's what we were told. So eventually what they are telling us is that there is no Sharia compliance issue, literally, at least at the HSBC level, in terms of the execution of the commodity murabaha in-house. However, they are questioning the execution at the commodity provider level, as in, like, you know, whether or not they have actually the commodity over there that they claim is tally to, yeah, as you mentioned, it's digital, right?
Yeah.
Whether or not the commodity volume or whatever that they have there is actually reflecting to whatever is claimed digitally. Yeah. So that is a different ballgame for us.
Okay, no problem. I know the lady who is in charge of Bursa Azila. I will connect you to her.
Great. Thank you so much. Appreciate
No
that.
problem. Yep, no problem. Any other questions? No? Okay, so let me just recap again. So remember, the platform wears two hats, right? As agent and also as investment wakil. So this leg is the investment wakil, and then the agent is on the last leg, where because the business owners would not have connectivity to the Bursa Sila, right? So the agent leg, which is worn by the platform, then sells that commodity on behalf of the business owners for them to receive that cash. Okay. So recap. So my recap is, remember, number one, sequential approach in terms of the sale of that creation of debt. Two, the responsibilities of the roles that are played by the respective players. In this case, it's your platform, your investors, and also your issuer. Okay, great. So let's move to the next structure. So the second structure is on, oops. Okay, so the second structure is on the equity crowdfunding platform. So remember, the key is equity, right? So naturally, remember my SALE? So it will be the last one, equity. So under equity, you can either do musyarakah, where both parties provide capital or capital in kind, or you can also adopt mudarabah structures. Mudarabah means only one party provides the money, the other one provides entrepreneurial business or their skills in support of generating that profit. So this is an equity crowdfunding platform app. So you can see the first leg is the same. The business owners apply for funding via this platform, and the platform then assesses viability of that business owners being able to repay back for that financing, right? So successful applicants then funneled into this platform, right? So the next leg, it's where we evidence the creation of this musyarakah venture. So under musyarakah, the partners are called musyarik, but they're just equity owners. Okay, this is just the English translation of it. Naturally, there will be more than one investors who will want to invest in this business owner's business. So you would have, again, the wakalah agreement. So earlier was your commodity murabaha leg. So instead of your murabaha agreement, in this case, you would sign a musyarakah agreement to evidence both parties' contribution. So what are they contributing? So for the investors, they are contributing the capital in support of the financing that is needed by the business owners. And the business owners also provide, so remember it's equity, right? So the business owners, what do they bring to the table to the musyarakah venture is their business, equity stakes in their business, but beneficial equity. It's not like, you know, a legal transaction. No, it's more a beneficial ownership of their business for the investors to invest in. So let me give you an example. So assuming if I've got a clinic, the clinic needs to buy equipment, right? Medical equipment, all right? So, and they go to the ECF platform because they know ECF platforms is big money, right? So they can raise, say, 100,000 ringgit, okay? And through this 100,000 ringgit, they go, and so once the 1,000 ringgit is then funneled to the business owners, they are a clinic, they will generate money. with the use of this medical equipment. So through the generation of cash flows, they can then profit share some of the monies in support of meeting the musyarakah agreements ratio that you agree upfront. So it could be, say, 100,000 ringgit and over 3 years average, which is what the typical ECF platform actually does. Within 3 years, I will pay, say, 10% in terms of my profit sharing that I would generate on a yearly basis to my equity partners who have contributed in support of me buying my medical equipment. So this is what basically it is. Pre-agreed capital contribution, which is, say, 100,000 ringgit. And your profit sharing is, say, 10,000 ringgit that you agree upfront. And the platform then issues certificate notes to evidence this business owner's financing amount and their obligations under the musyarakah venture. And because they are providing this platform in support of the business owners, they get to charge a fee. And this is what this is here. Okay. So this is your musyarakah. So under musyarakah, both are musyarik, so both puts in money or capital in kind. In this case, these guys put in the money and these guys provide equity ownership or opportunities for them to invest in their business. But it's more beneficial. So it's on paper, but not a legal thing, right? It's to create that Sharia compliant structure in support of them receiving that financing amount. Okay, so this is musyarakah. Any questions? Everybody good? I hope you haven't fallen asleep. Okay, next structure. Oh, sorry, let me just quickly run through this. Okay, so some of the terms of the musyarakah condition, which I will just recap again, is so the platform issues the certificate of notes to the business owners to confirm their obligation, which is that financing amount and tenure. So both parties must provide something. So here investors provide musyarakah venture and the business owners then contribute their partnership in support of generating cash flows to meet this profit sharing ratio. Typically, when we spoke to our ECF players, ideally they would want a sharing of between 80 to 20% shareholding. This is again, beneficial, right? It's just on paper. Is ideal, but ultimately is always, subject to commercial reasoning whether you end up at 80-20 or not. All right. And the reason why you need to confirm this upfront is because in support of fulfilling this musyarakah condition, you are exposed to both profit and also losses. And losses will be based on your equity holdings. So as an investor, how do they protect themselves? Because, you won't want to be exposed to losses, right? So it's always a commercial reasoning. So if I, as an investor, will want to participate in this ECF venture, I would typically choose business owners who have raised financing before and they've got a good track record, but it's always a commercial. So high risk, high reward. So it really depends on what that risk profile of the investors here, because of this venture, there will always be this exposure of losses. All right. Okay. So the next one that I have is the buy now, pay later platform. So you can see here, the leg is still the same. So the business owners apply to the platform for financing in support of them buying specific goods, because this is buy now, pay later, right? So they want to buy now and then pay later. So the platform then assesses the application. And once they are approved, the platform then provides this pre-approved credit limit. So say, for example, it's 100,000. I'll give you the same example. So it's, say, for example, they gave up to 100,000 ringgit, and I'll use the same medical equipment business owners in support of them buying specific electrical medical supplies from this merchant. So typically the platform will already have a pool of investors at the back end. All right. And again, here the platform appoints themselves as a wakil to act on behalf of all this pool of investors to participate in this mudarabah agreement. So earlier was musyarakah, where both parties put in something. Here is only the platform or the investors that puts in the money. Okay. So the customer, so once you have already financed the amount at the back end, and you already have this approved limit given to the business owners, they then go and buy from the merchant, right? But the purchase price is net of the merchant discount rate, MDR. So say, for example, the amount is 100,000 for one particular medical equipment, but what the merchant gets in return, net of this MDR, say it's 8,000 ringgit. So 2,000 is being cut off from the amount. This is just illustration purposes. It could be 900. They could, you know, it could run from, say, a smaller amount of, say, only 500 ringgit, right? So say, for example, for 100,000, but the merchant only receives 9,500. So that 500 is then retained by the BNPL platform as their revenue. And then what happens next? So as a wakil, again, remember this wakil agreement, they then enter into a mudarabah agreement on behalf of the investors with the business owners. So again, is a profit sharing ratio, amount deducted as MDR is what is then used for this profit sharing back to the investors. Any questions so far? The difference between the three that I've mentioned? Can you see the difference? So in support of them generating revenue, so again, is the clinic generating revenue from the medical equipment, right? They then pay back to the buy now, pay later, that 100,000 ringgit, which they use upfront. So what is it in it for the merchant, right? Why would they want to allow this merchant discount rate? Is because of these factors. So what's in it for the merchant is, number one, they unlock future sales of the products. So historically, I mean, so the example that I've given is actually Do It, and the founder Shafiq has agreed for me to share some of his key terms that he's planning to launch soon, inshallah. The number one, hopefully he will still, when he launched, hopefully he will be the world's first buy now, pay later B2B platform. So what's in it for the merchant? He's already onboarded a medical supply equipment called Astra. So Astra has in their portfolios, say 100 clinics, right? So, but the clinics can probably only buy one equipment at a time, but through his platform, they can buy more than one equipment. So for that merchant, he unlocks future sales of these products. On top of that, historically, he will then have to be exposed to the credit risk of his clinics and do the monitoring, ensuring that they pay back on a monthly basis. But now he doesn't have this headache. He can transfer the headache of monitoring this credit to the buy now, pay later platform. So to the merchant, he's more than happy to share, you know, some of the costs, which is why, you know, in terms of this merchant discount rate, what's in it for him is because of these two core things. Okay. And a quick rundown to some of the typical mudarabah conditions similar to the musyarakah condition is, so you have the platform setting this approved credit limit to business owners. And then what do the partners contribute? One provides capital, the other one provides their business entrepreneur. The difference between musyarakah and mudarabah, so earlier, your losses under musyarakah is based on a pre-agreed sharing ratio, but it's basically a shareholding structure. But under the mudarabah structure, losses are borne if the business owners are negligent. So in this case, if they default lah. Clear? I know it's quite it can be a bit confusing.
That 10% return has to be there by the first year. What if they cannot make it?
I'm sorry again?
The profit sharing thing,
Yes,
10% that you mentioned for both structure 2 and 3.
correct.
What if they cannot achieve that? What if they cannot, you know?
I mean, the screening here would ensure that they would achieve it, right? So there would be a thorough screening in terms of the profitability of their business to business to ensure that they can repay back within the tenure.
So both ECF and also BNPL platform, this one requires some governance or regulatory license.
Correct. Under ECF and P2P, you must be a recognized market operator, RMO licensed by Securities Commission to receive monies from individuals.
For us, a software developer, we can make the software. That means we have to sell that to those who has the license.
Correct.
Right?
Correct.
And that is not easy.
Yes, there's a lot of competing because a lot of my fintech players, my P2P. So under P2P, SC announced or actually approved 15 players under peer-to-peer, 5 are Sharia compliant. Under ECF, I think they announced 8 ECF players, only 1 is Sharia compliant. So you can pretty much guess under the ECF who is that entity lah.
How do we offer our services? Because we are pretty sure that they have the license, but we have the technology.
But they're already running in business. So they are. So these are all actually commercialized already.
With blockchain?
Some are not with blockchain. So yes, you can approach the ECF Sharia compliant entity to offer your blockchain solution. Right now, it's all running on cloud.
Yeah, so that is where we can contribute. Yeah, we don't plan to get the license ourselves. We want to focus on developing the software. But yeah, how to reach out to these guys?
I think it's really good that you do not want to have the license is because there is a queue in the Securities Commission waiting for the RMO license. So as much as possible, a lot of my existing fintech players leverage on the existing RMO license that already have got this license. So, and let me give you an example. So I've got MAT Cash. So MAT stands for Multiply, Assist, Donate Cash Platform. So historically, they've received monies from corporates in support of them transferring the monies into Kad Hassan or interest-free loans to her woman entrepreneurs. So her platform empowers women entrepreneurs for their business, micro business financing. So, you know, like example, nak dekat raya ni kan, they all want to do kuih raya, baju raya. They will go to her platform in seeking for this interest-free financing. But she cannot receive monies from individuals because she needs to be licensed. So what she's planning to do is she was planning to hook up with Global Sedekah, who has got a ECF license. They've got a peer-to-peer license who can receive monies from individuals. So as much as possible, I will inform all my IDE companies to work with the existing players. Do not try to reinvent the wheel because there are already platforms that are offering these solutions. So I'm glad that you are happy to work with, and I'm more than happy to connect you to the founders in support of strengthening their value position as a platform. Okay?
Thank you.
My absolute pleasure. Okay, so we're running a little bit behind time, so let me just quickly run through this. Okay, so this is the last structure is my cash wakaf. So this is how we plan to embody zakat.
Arham is raising his hand here, so
sorry. Hi, Arham.
Hi. Is it time for questions?
Boleh. Tak apa. Let's.
All right. Okay. Thank you very much. My name is Arham from Sampul. We are an application that allows user to generate digital wasiat for digital assets. So I have 2 questions. One is basically you shared with us all the Islamic contracts. Does MDEC offers any service, especially for startup when we want to bring in investors? Maybe we want to structure it in a Sharia compliant way or Sharia compliant contract. So does MDEC have that service to offer maybe some legal advice or to have a consultant to consult all these startup? So that is my first question. My second question is how can we be part of the IDE, Islamic Digital Economy in MDEC? Do we have to be an established company, or you can accept a mere ideation stage company or startups? Thank you.
Okay. So to your first question, you probably heard of Fintech Booster. So it was a collaboration between MDEC and also Bank Negara. So Fintech Booster is supposed to be the one-stop center for all fintech. So this is generic, doesn't matter whether you're Islamic or not, right? So you can go to this Fintech Booster platform, and in that Fintech Booster platform, it offers pro bono basis based on the pool of advisors that we have engaged with. So there were 3 pillars that was launched. Number 1 pillar is legal and compliance. So under legal and compliance, we secured almost 11 legal firms and also Sharia advisors to give you services on a pro bono basis. And once you decide to actually engage with them, naturally the rates will be preferential because you've gone through this Fintech Booster. So it's to ensure that there is a thriving ecosystem in support of the needs of our fintech players. The other 2 pillars which we are hoping to launch is called business model and also technology. So wait for that to come out, and then I'll explain a bit more on that later. Okay, on the second question, yes, so I'm on my call, I've got my team members. Her name is Najiha. So typically, like under the first batch of part 1 deep dive, we blasted out an email for everybody to join our community. We will do the same after this call, maybe tomorrow, for you to be onboarded into the IDE. And remember, the IDE value proposition are the 4 that I mentioned earlier. You would have access to the grants. You will have access to all of MDEC's contacts, in support of funneling potential Malaysian companies into other Islamic finance communities globally, and we're currently doing that under Qatar, right? And also to be part of any other initiatives that we're planning to do over the next year or so, because we will continue to have collaboration agreements. You may have already picked up last week, we signed an MOU with MTDC, and we're in the process of funneling or showcasing all of our Malaysian companies to their communities who may have need of our digitalization solution. So MTDC does commercialization of technology, but some of those technologies are not digitalized yet. So how can our tech companies offer that solutions to them? And hence why we've signed an MOU with MTDC. Okay. All right, can I just quickly finish this? I've got another few more slides actually, but let's just quickly wrap up and then we can jump into Q&A. So under structure 4, right? So this is again, I like to give the example, Matt Cash, Multiply, Assist, Donate Cash. The founder is Noraiza. She's done extremely well and she's won quite a lot of awards and also winning some accelerator programs. So under this structure, so right now, so under individuals, you can see here under individuals, she's hooked up with Global Sedekah, who has got license to receive monies from individuals. So historically, she has been receiving monies through institutions and also corporates in support of empowering these ladies. So typically the money then goes into this investment account. And she uses her platform. So in this case, her platform called Mad Cash will then receive the applications from this respective individual woman entrepreneurs, who then runs screening. So the microfinancing that is released to the successful applicant through Kad Hasan, meaning it's interest-free financing, they just need to pay back. So what makes it interesting is to see how we can embed zakat or wakaf into the structure. Because some of the women entrepreneurs are registered asnaf, people who are in need. And if, say, for example, the donation or the zakat money is 5,000 ringgit and it goes to 5 different women, so every woman gets 5,000, right? So after 6 months, once the women entrepreneurs, and there are historical evidence to prove to you that women are very good paymasters. So within 6 months, the monies get paid back and it goes into the system to support another 5 women. Oops. And it goes back into support another 5 women. So that's where this perpetual structure then comes into reality. And these are some of the structures that we are talking to Lembaga Zakat Selangor in profiling our tech companies to see how they can help in terms of monitoring, governance, the zakat payments, number 1, 2, and also to see how we can increase the disposable income of our zakat. So move them from poverty to them to become people who have moved up in terms of their cash flow generation and be able to then become zakat payers. All right. Okay.
Ruslina, thank you so much. That is exactly what Wakaf Go is. So out of curiosity, if you don't mind,
Sure.
is Medcash already blockchained?
I don't think so. She's blockchain yet. Yeah, you could. I can hook you up with the founder. Yes, she. What else? I think she uses cloud, and there is some algorithms in terms of her AI, but I don't think so. She's embarked on blockchain yet.
We have everything tokenized and planned. Yeah. We don't plan to have the similar license. We just want to do the software. That's it.
Okay, great. Yeah, so you have 2 different value proposition. Great, great, great.
Thank you. Thank you.
Okay, so this is for my agnostic players, right? If you want to embark or explore your journey into the Islamic digital world, these are the 3 key steps that you would like to ask yourself. So number 1, do you offer a neutral tech product or services? Typically the answer would be yes, right? And can this tech solution be used to support the Islamic digital community? Okay, so second question. So going to for example, I've got like Kohalal. So Kohalal already automatically serves the halal economy, correct? So Mazri automatically becomes an Islamic fintech player in this sense. Okay, so under step 2, what is your value proposition? So if you offer specific problem statements that can be resolved, that will then help in terms of how you want to attract or provide specific solutions to the stakeholders within the IDE community. So in this case, this one, does your tech solution addresses IDE related problems? And then naturally, MDEC, as I mentioned earlier, the gentleman asking us for advice, we would then be able to connect you to our experts who are already part of our FinTech Booster program. And then thirdly, the third step is specific financial related products. So naturally that governance structure to complete the Sharia structure requires to be endorsed. Yes, there are costs involved, but do explore some of the grants, incentives, or subsidies that are already provided by the government in support of you being part of this journey with us. Then finally, the due diligence process, like I mentioned earlier, ultimately it's up to you to make that decision. Islamic Fintech is to provide an alternative solution to the public, but at the end of the day, it's up to the founders to decide whether you will want to be part of this offering of ethical solution based on your commercial reasoning. All right.
Ms. Ruslina, one question, quick question.
Sure,
Okay, for Kohalal, right? We are pretty much in compliance with Sharia because we are digitalizing the Jakim playbook lah, basically. That's in a nutshell. But do we need to apply for the Sharia compliance certification as well to be part of to call ourselves as a Sharia compliant company?
That's a good question because you don't really offer a financing per se, right? And my examples are all financing related.
It's not directly into like financing because we are actually improving the process of all the process before to get finance or before the monetary thing coming in.
Yeah, I mean, in my opinion, because you're already serving that community, you would fall under that category. But to be on the safe side, like I said, FinTech Booster is free. There's nothing wrong for you to speak to any of our advisory service providers, right? So if anybody else were to ask you a specific question, then you can say, oh, I've spoken to Mashra. Mashra says, example, Mashra says that because I am already serving the Jakim halal community, I am not required, right? So it's not you saying it, but you've got an independent party in confirming whether you are or you are not.
Okay. All right.
Yep.
Got it. Thanks.
Okay. Okay, so the next slide will be on examples of tech companies, who are agnostic in the beginning, but are looking to explore how they can be part of the IDE community. So this is Alfie. Alfie does alternative credit. So when you look at screening of credit, is agnostic, doesn't matter. But they want to provide a specific product that serves the IDE community. So in this sense, so yes, they are an agnostic player, all right? And their method is in support of financing to B40 communities. There's microfinancing that they lend. So can the products be offered? Yes, they can. Tech solutions can be offered. Alternative credit can drive financial inclusion, which is so true, and provide more insights to the underserved of customers' product. So this is how they manage to connect the dots to the IDE community in their product offering. So because they have got a solid line to IDE, they are now eligible to the 4 million matching grant that I spoke to you about. They have been shortlisted under the top 25 FWD cohort, and some of the other winnings that they have to date. So this is one example. Another example that I like to raise is Mason Kira. So Mason Kira is an agnostic. So what they do is they digitize micro SMEs into the digital world. So for example, like a barber. So historically, if he had to write all his customer, how much he receives on a daily basis, the products that he has to buy in terms of raw materials, minyak rambut or whatever, through Mason Kira, he can then digitize every single thing and not miss out on anything. So that is what Mason Kira does in support of teaching entrepreneurs on how to manage the inventory and also facilitate bookkeeping. So this is a clear example of financial inclusion, but it's agnostic. How can he then connect the dots to IDE, which is my world, is by incorporating this tech solutions to incorporate Syariah microfinance, because he's already embodied micro SMEs, and alhamdulillah to date he has already secured 1,700 micro SMEs onto his app. So these players would likely require financing to further expand their business, and he is currently speaking to other potential tech companies and also maybe Islamic banks in support of offering this micro financing. So it could be either commodity murabaha or any of the equity structures that I mentioned earlier. So right now they have also embedded this tax zakat payments through their application. So because of his requirement to advance or expand his product offering, he can then apply for this matching grants. Because if you are just an agnostic player, if you only fulfill number 1 and do not fulfill number 2, you will get rejected. So you must fulfill 1 and 2 to be able to be successful under the iConnect initiative. Okay, and I've got one final one. Is Matt Cash. So so I mentioned this earlier, right? So just very quickly, so Matt Cash, Aiza, she empowers women, and she is currently in talks, or we are funneling 4 companies to be exact, in support of showcasing them to our Lembaga Zakat Selangor, and how we could actually utilize or mobilize some of the zakat payments in support of this digitalization journey. And because of this, she is currently a candidate for the accelerator program, and these are the latest achievements that she's achieved to date. Okay, so I think this is my last slide. Thank you.